Hello, my name is Terry Badger. I'm the managing editor at BAI and host of the BAI Banking Strategies podcast. Thank you for joining us for our webinar presented by Knowledge Lake, Why Shared Services Are Your Superpower. During today's discussion, you will learn why document processing shared services are instrumental for banks and credit unions to stay agile, innovative, and competitive in today's era of disruption. Before we get started, a few housekeeping items. If you have any technical issues on your end, please know that a recording of today's webinar will be sent out to view on demand. And if we have any problems on our end, we will try to get them fixed as quickly as possible. We will be using the polling feature during today's webinar. Please note that you will not see the polling questions if you are viewing in full screen mode. So we ask that you minimize the module so that you can take part in today's poll. We will end the webinar with a question and answer period. At any time during the discussion, you can type your question into the Q&A box on your screen. And finally, at the end of today's webinar, an online evaluation will appear on your screen. Your feedback is important to us at BAI as we work to address key issues impacting the industry. So please take a few minutes to complete this survey. Today's webinar was originally planned as a two-man show, but unfortunately, Bob Brown is not able to be with us today. But we do still have Joe LeBay, Vice President of Product Solutions at Knowledge Lake. In this role, Joe works with customers, system integration, and original equipment manufacturer partners to incorporate the Knowledge Lake intelligent automation platform into vertically oriented business solutions. Prior to joining Knowledge Lake, Joe was the founder and CEO of RatchetSoft, a robotic process automation software firm. Joe, welcome. You're soloing today, so let's get things started.
Great. Thank you, Terry. I appreciate you having me.
So, Joe, let's start with how is document processing management handled today at many financial institutions?
It's a great question. So most financial institutions do have a primary document repository, and that's a great start. However, over time, as they purchase more and more point solutions and participate in mergers and partner with others, documents start being stored across multiple systems and potentially in multiple locations. The thinking being, and it kind of makes sense to store documents as close to the systems that facilitate a given transaction that those documents represent. I mean, it's certainly reasonable to think that if I store all my documents in a central repository, how will the systems that need those documents get access to them when they're needed? Unfortunately, this kind of thinking results in documents either being replicated in multiple systems or strewn across different systems depending upon the transaction type. And there's very little discernible logic dictating how those decisions are made. They tend to be very opportunistic, and it quickly becomes a mess and frustrates everyone involved. Further, there's very little consistency with regard to how documents are gathered, and that's because the transactional systems, the systems that what we would normally call line of business systems, they usually include some sort of document collection process. So the institution ends up with a disjointed and inconsistent experience, whether it be for customers or employees or partners, and that costs more. That decreases the ability to reuse documents and creates just lots of frustration. I'll give you an example. This is a Bob story. Since Bob's not here, Bob's stories will become my stories today. Bob was working for a bank, and one of the directors had moved. And as part of that move, he had to fill out a change of life event form, which was, I used to live, this is now where I live. Well, he filled out a form, submitted to the bank, and then he got another form, and 2 forms became 4, which eventually became 13. So in order to update this poor director's address in the banking systems, he had to fill out the same form 13 times. Well, needless to say, that didn't fly very well, and the director went back to the board and said, this is the experience that I had, and I'm an internal guy. I'm one of our own. How are we actually treating our customers, and what are they thinking when they have to fill out these forms over and over again? So needless to say, that didn't go well, and that that one concern initiated a digital transformation project that helped the organization become a bit more integrated so that they didn't create that lackluster experience. Other things that I see that institutions are doing is that documents tend to still be a bit territorial. Folks have figured out that information has power associated with it, and there's an inclination not to share documents, kind of keep them close to the vest. This is my group's transaction, and that creates both missed opportunities and risk exposure. So what I'm saying is not what we see across the board, but I can tell you we see these kinds of things very often, and hopefully by the end of today's session, we've got some recommendations on how to avoid that. With that, Terry, I think there's a poll that we've got.
Yes, indeed there is. If we could bring the poll up, please. So the polling question is, to what degree does inconsistent document processing practices negatively impact your organization? You've got three choices here. Is it a small or negligible or no impact? Is it moderate impact? Is it significant impact? We're going to leave these up for a while and give folks an opportunity to vote, but it looks like a pretty clear trend toward the moderate impact choice. So, Joe, what do you think about that? Is there any surprise to you that it would be the middle ground here of our choices?
Not really. I would say that's typical, and usually here, like in the United States, I think that's very typical. I've been doing some webinars lately overseas where that moderate and significant number are flipped on top of each other, because I think here in the United States, we've done a really good job, or a decent job, I shouldn't say really good job, a decent job of managing paper documents. And I think that's what people think when they see that question. However, when you start to expand it about and include the idea of automation and integration and can I reuse documents across the organization, all of a sudden the significant impact number starts to go up. But here in the States, that is a typical distribution based on that question.
So let's dig down a little bit deeper here. In how you talked a bit about how the documents are document processing and management, how that's all handled today. What are the problems with that approach, how folks are handling them as you see it?
Sure. Well, I think the problem springs from the big problem, which is when you don't really have a handle on how these documents are gathered and how they're processed, what happens is you create these fragmented virtual repositories in the organization, and that's what creates these disjointed experiences that I mentioned before with regard to employees and customers and with auditors. Needless to say, when the auditors see that there's a little bit of chaos with regard to a documentation trail on transactions or customer relationships, that kind of gives the editor pause. Now, specifically, where some of the problems lie, one of the most important ones that I see that have become high profile of late is that it's very difficult to gain a 360-degree view of the customer, which makes upsell and cross-sell opportunities more difficult to achieve. By decentralizing access to customer documents and data, it makes it difficult to expand the wallet share because organizations tend to have a transactional view of the customer rather than a more holistic view. And that's something that I'm going to touch on because it is a hot button for financial institutions today, understanding the customer as a whole as opposed to just transactions. And that problem of viewing the customer through a transactional lens versus a holistic lens has been exacerbated over the years since the Great Recession because money's been cheap and there wasn't really a strong focus on innovation and leveraging the quote-unquote relationship with the customer. And part of that was because the silo transactions were throwing off enough cash to keep people interested. But I would argue that is not where we are today, not by a long shot. In addition, when a financial institution doesn't have a handle on its customers' documents, it tends to ask the customer for the same document over and over again, just like Bob's director who had to fill out the change of life event form 13 times. This not only slows down new transactions, for the customer, but it also creates an opportunity for the customer to go shop around for a better experience. It also damages the tenor of the relationship. We're finding that customers of all ages, not just young folks, expect a more digital and less burdensome experience from their financial service providers. And anything that slows down the deal or gives the customer pause is an opportunity to lose not only an opportunity for a deal or the deal at hand, but most importantly, losing the customer itself. And we see a lot of that as organizations migrate over to delivering their services digitally, kind of lose track of that holistic view of the customer, and that's why we're seeing customers having fewer and fewer number of transactions through their primary institution. They're spreading the wealth, if you will, across whoever gives me the best experience, or still to a certain extent the best deal, the best rates, etc. It's really hard to build that relationship that is durable and long-standing when you're treating the customer as more of a set of transactions rather than a person. Then, of course, there's audit and compliance. Everybody talks about we want a sweat-free audit. Well, sweat-free audits start with having access to all the information. When documents and information are all over the place, it becomes real difficult to facilitate even the simplest of audits. Preparation for the audit is difficult, and if the auditors determine that you don't have your act together, it gets the audit off on the wrong foot. Plus, since there are so few controls often in place with regard to how documents enter the organization, there's a good chance that there are copies of customer-sensitive information sitting in the staff's email accounts, or worse yet, on computers in the branch. So the big problem that is created is this, whether it's intentional or unintentional, is the creation of this unwieldy virtual document repository, and that's something that forward-looking organizations are working hard to avoid now.
Yeah, Joe, you've been talking about from the customer standpoint. You touched a little bit on the compliance and the audit side as well. The internal stakeholders in this. Are there other risk factors? Are there other risks involved, exposures that the way things are done today, subjects financial institutions to?
Absolutely. The risk and compliance exposures are enormous, and they're getting more significant. And this is really Bob's area of expertise more so than mine, but I can tell you what I have seen in organizations. The regulators are demanding more institutions gather a more complete information regarding transactions and potential transactions. That's the one that's really tricky. Potential transactions earlier in the process than ever before. For example, if you take a look at recent requirements for Dodd-Frank 1071, where the relationship with someone starts when you start the conversation, not when they decide they want to be a customer, or not when they ask you about a specific product. It's when you start a conversation, that's when the relationship starts, and that's when the documentation process has to start. Another example would be recently, I think within the past couple of weeks, the CFPB just released its discussion document regarding guidelines for how institutions will handle customer-directed requests for information. And the only way that a covered entity can have any chance of being able to give a customer back their information or direct it to another institution or dispose of it is if they have a handle on this document collection, document processing capability. The bottom line is compliance is not easy if you have to engage in acts of heroism each time a request is made. And the fines, they're not cheap, especially as regulators focus more on equity in lending and ESG issues. In the minds of the regulators, financial institutions are kind of guilty until proven innocent, and the only way to have a fighting chance is to have a clean and consistent path of documentation that covers the entire customer or prospect relationship, not just the transaction.
So now we've sort of laid out the problem. We've identified our constituencies, customers externally, compliance entities internally, and other internal stakeholders as well. So with that all teed up, Joe, how can financial institutions solve these problems?
Great. And this is the fun part, talking about solutions to these problems. The problem begins to get solved by adopting a document processing as a shared service mindset. We've seen this before with other functions in organizations like directory services. Rather than embedding access control rules within every network application and resource, that function has been abstracted away to the infrastructure in the organization as a shared service, so it's much easier to assign or revoke access control. Well, the same applies to document processing, and I believe we have a couple of slides. If we could pull those up, I'd love to talk to those. All right, so I'm just moving some screens around so I can get a better view at it. This is kind of the way many financial institutions today are handling the document processing process, for lack of a better word. What you see here are documents coming into the organization's bloodstream through all kinds of channels. That's not going to change. Doesn't matter how many portals you set up and how many dedicated emails you set up. The customer is going to send you information the way they want to, and that should be encouraged. We shouldn't force them into how our walled garden works. However, how those documents come into the organization, regardless of the channel, is where the trouble starts. So as you can see here in this slide, we've got documents coming in through the door, through the window, through the chimney. Some of them are getting created, internally, and the point is they then take on a life of their own. Usually they're processed by the person who requested for it, who then forwards a copy to the person who needs, let's say in the case of a loan, they may need to send it to an underwriter who's got to put it into a, rekey data into some spread software or something like that. But eventually these documents come to rest in a repository. And I put up the quotes on that because in some cases there is a traditional ECM product in place, like Meridian Link, Laserfish, or something like that, open text. And that's good. That's a good way to start. However, it's usually directed there for specific purposes. And frankly, what I've seen, a lot of times it becomes a content junk draw because there's really very little context with regard to how those documents got there. Maybe a little bit of metadata that indexes the documents. Hopefully they're fully text indexed, but there's really no correlation between transactions. So each individual's customer's documents tend to live on their own. That's the good scenario. The other repositories where documents end up could be in a transactional system. So I talked before about each individual system. Each business system tends to have its own document collection and processing capability, which then leads to that inconsistent experience. So you've got some documents that maybe live in your ECM, but because this is a loan origination set of documentation, that's going to live in our loan origination system. And so you could start to see where the problem now is occurring. But then it gets worse because we then have the largest ECM in the world, which is the corporate network share, which is the idea that somebody smart took it upon themselves to come up with some kind of naming convention for folders and hopes that everybody else thinks the same way and stores documents in the correct folders in the organization. Everybody needs to go to that location to find them. This is how documents get lost. This is how documents get misclassified. This is how documents fall into the hands of the wrong people, folks who shouldn't have access to it because you're limited in terms of how you can security trim the documents that are in those network shares, assuming you can find them. And then it gets even worse. Email accounts have got documents. You've got personal documents that flow into the organization that just live in people's emails accounts or that live in local storage on a hard drive at a branch somewhere. This is a nightmare from a functional standpoint, let alone from a compliance standpoint. And now I have to process the document. So the document comes in, it's stored wherever, and so processing is usually done. There's a lot of manual processing, a lot of rekeying of information. There may be some specialized capture because those line of business systems not only have a way of receiving the documents, but they've got their own built-in capability, maybe to handle workflow as well. Usually relegated to transactional documents only. So we're not even talking about unstructured documents like contracts and letters and things like that, because generally systems aren't really created or not tooled well to handle that kind of unstructured data. And then access is ad hoc at best. Lots of organizations still have on-prem systems, so unless you've got a Citrix connection into the network or a VPN connection, you're kind of cut off from the outside world. And there's a lack of accountability by definition. How, as an institution, can be accountable for the information that I receive from my customers when some of them are in my document management system, some are in the transactional system, some are on the network, some are in emails, some are on a hard drive somewhere. You kind of see what the problem is. So here's what we propose as a better way to do this. And again, this is not rocket science. We've seen this pattern before. Instead of having documents come in through whatever window or door they happen to come in through, let's create a ring of services, a ring of document processing shared services around the organization. So documents are received into the organizational bloodstream in a rationalized way. Still, we can receive the documents through whatever channel the customer wants to correspond with us through, but when they come through a central hub where they are, as I said, rationalized and standardized, and we can do things like, okay, for this particular document, we can have document checklists, and we can have a dedicated workflow that defines the exchange, the back and forth with the customer about what documents I need. I need a different version of this document. Oh, you're engaging in a transaction that's a little bit more sophisticated, so I need 3 more documents. All of that should be handled. That negotiation, that collection, that verification should be handled at the infrastructure level, not at the person level, not at the individual software level. And then once those documents have been brought in an orderly fashion, we can then start to standardize the way we process them. So using things like machine learning for classifying a document. What is this? Is it a balance sheet? Is it is it some kind of credit statement? Those are the kinds of things that we can do. We can classify the document, and then we can extract the information from those documents because we now know what they are. And that's when we can start automating processes, because now that we've got the document, we've extracted the information, we can now set up a workflow that helps facilitate whatever transaction that document represents. As opposed to before, you just pass around a collection of documents from person to person, hoping that they are complying with the governance rules about how we manage the documents, how we extract information from them, how we dispose of them when we're done working on the transaction, et cetera, et cetera. And then when the documents come to rest, they are in, hopefully, a central, secure, scalable, available from anywhere, especially if it's cloud-based, repository. And only then can we start talking about things like, and we'll talk a little bit about this in a couple of minutes, contextual access to documents from within line of business systems. The fact that all the documents are now in a central location and they have audit trails, you're almost guaranteeing compliance by doing that. And one of the things that's nice that you can do is if any documents have kind of meandered outside of the system for a period of time, you've got an audit trail of where those documents have been, so you can set up routines that will allow you to go back and clean up some of the documents that may be sitting in an email account or sitting somewhere, somebody downloaded a document for a particular reason. You want to go back and clean that up. So you can only do that if you set up this ring of services and do it at the infrastructure level rather than at the individual application level. So the question that people ask then is, well, how do I do that? How do I set up that ring of services? What are the services required? We kind of touched on them. Generally, the category of services falls into these 3 categories, or what we call 3 pillars: intelligent capture, automated workflow, and accessible repository. And this is all going to sound familiar because we just talked about a lot of it. It all starts with a omni-channel capture capability. Any document in any format coming in from any location, and that includes going out and acquiring documents. For example, there's an institution that I work with, and they are part of a marketplace that, for whatever reason, doesn't send them notifications when deal documents come through. So they have people, or they used to have people, that would go out and they would poll the marketplace portal looking for deals that were applicable to them. Well, now, using technologies like RPA, what they have the ability to do is to have a robot go out and pull down those documents so that they can respond to them more quickly, hopefully win more deals. And they've got an orderly way for bringing these in, as opposed to worrying about, did Joe bring down the documents today? Oh, Joe's on vacation? Well, that would have been nice to know. So we've got a day and a half worth of documents sitting out there on the portal site. We maybe have lost some work because of that. Once the documents come in, this is where we employ technologies like machine learning to classify the documents, auto-separate them if people just threw a bunch of documents into a scanner and sent them over, and extract the data that's needed for the purposes of now facilitating whatever transaction that represents. And that's when we get to the automated workflow standpoint pillar. And that's where we use technologies like RPA, robotic process automation, or RDA, or access to native APIs for the purposes of moving that data around and building durable workflows that are aware of the other workflows. So if I've got a workflow in my loan origination system, but it has no connection to a transaction that's being conducted in the payment system, well, that's an opportunity lost. Whereas if I centralize my workflows, the workflows can be aware of these different transactions for a given customer, again, getting closer to that holistic view of the customer as opposed to a transactional view. And then finally, when the documents come to rest, they're stored in a secure, scalable, unlimited location. We can do the single-click doc search from a line of business system, and we can analyze what we've received. We can be accountable for it. We can start thinking about, well, how do I serve this customer better? They sent us some documents as part of transaction A. Well, there's an opportunity to cross-sell them something or upsell them something based on some of the information that was gleaned out of those documents that really wasn't part of that transaction. And you can only do that if the documents are in a central place and you've got the ability to analyze them. And then needless to say, when it comes to compliance and working with auditors, it's a lot better when you can say, okay, what do you need? Here it is, as opposed to, okay, give us a few hours. Hopefully we'll be able to go and find it and bring you back something. So that's basically the 50,000-foot view of what are the services that need to be built into that ring of services.
A lot there, yeah, but let me ask you, how do employees access documents from context of a given transaction if documents are not stored in that transactional system?
That's a great question. I believe we have a video that we could advance to that I'd like to show that I think will make that a little bit clearer. So what I'm going to show you here is what's called in the RPA world a attended bot. This is a bot that runs on the user's desktop under the user's command and control. So the bot doesn't do anything without me saying, hey, bot, go out and do this thing for me. Now, it can be developed to do that if you wanted it to, but when we're talking about attended bots that run on a user's desktop, generally people want control over that, as opposed to unattended bots which get executed automatically based on some condition of data or a timer or whatever. But in this particular case, one of the most common use cases that we see for a attended bot is the ability to do this one-click document access from my line of business system. So to your question, Terry, it's like, well, wait a second. I'm using Jack Henry, as I am in this example, but my documents are stored in some repository somewhere that Jack Henry doesn't know anything about, and I can't modify Jack Henry to go out and call that repository. So how can I create that linkage between the two? Well, that's what this little button up here represents, this little blue button next to the minimize button. And as you'll see, I'm going to advance this video. What this allows me to do is the bot has recognized that I am in the context of a particular customer. And so knowing that it can do something for me, it has rendered this button here in the title bar. And when the user clicks it, it says, hey, I know you're on company Anacott Steel. Would you like to do a company search in the repository to bring back all the documents related to Anacott Steel? And that's exactly what this is going to do. And by the way, this list could have anything in it. It could do people searches. It could go out and pull down maps. It could do anything that you wanted to do. That's a whole conversation for another webinar. But in this case, we're focusing on the single-click access from a line of business system without changing it. So in this case here, I say do the company search, and it extracts that company name from the Jack Henry screen, and then it issues a search to the repository and says, hey, show me all the documents that apply to Anacott Steel. And there's the results set. And then I can open up the document. I can have it configured so that if it only brought back one document, it would automatically open it. Here's the really cool thing. That button, that little blue button up top, that button can be placed in this repository system as well. So for example, let's say I didn't have Jack Henry open and I started from this image. And people might want to go from the image to this record in Jack Henry. Well, I could just as easily configure that button to run within the repository screen here that when clicked will say, go and bring me to Anacott Steele's record in Jack Henry. If there's an API to do that, I can call the API. That often is not the case. Very few applications have good UI-based APIs. So using RPA, we can mimic the steps that the user would, which would be load Jack Henry, log in, conduct a search for the company that was extracted from the screen, in this case, Anacott Steele, issue the search, bring me to that record. So it's a two-way conversation that you can have, but none of this happens without having your documents in a central location. Otherwise, how in the world could I direct that button to go and find documents on a network share or in somebody's email account?
So, Joe, what you've been talking about, this makeover, this transformation that you're talking about, it's a pretty big deal. I mean, there's a lot to it. Makes me wonder, does this have to be done all at once? Can this be done piecemeal? Is there a way to kind of do this in bite-sized pieces?
Yeah. Well, the answer usually depends on the vendor that you're talking to. The good news is that this can be done piecemeal. Kind of takes away some of the value, I think, when you say that. But I think a more iterative approach is really the only way to go. Financial institutions are cautious by nature, and most initiatives that are based on a rip and replace or do it all at once philosophy are going to be met with serious resistance and probably not get out of the block. So while we'd love to do the traditional, especially me as a consultant, would love to do the classic, deep outside-in business strategy analysis approach, I think a more sensible approach geared towards achieving immediate results is to tackle the problem more tactically. So, taking an iterative approach where you're implementing pilot programs around bite-sized, new or improved customer or employee experiences, like just going to automate part of the loan underwriting process. You're going to get enough bang for your buck right there. What that does is not only does it demonstrate your ability to get some quick wins, but it also helps you develop a methodology. And although no doubt there are certain tenets to how to do this on an iterative basis, it also has to factor in the culture of the organization, the commitment from senior management, the expertise of the people in the organization, the desire of the people in the organization to do it. And so by doing it iteratively, you can kind of, tweak that methodology as you go and start to create momentum for a broader effort. A lot of times I've seen institutions say, well, we're going to do these 3 little projects, and then the savings from that, which we'll be able to measure very clearly, are going to be used to help fund a broader effort later on. And it'll also demonstrate to our superiors that we do have an ability to innovate. We do have ability to deliver on these kinds of projects. One of the side benefits I think a lot of organizations don't anticipate when they go into this is that they learn how to be a better partner. And when we start talking about things like embedded finance, embedded banking, being a good partner, being a integratable partner is critically important. This approach also helps create greater alignment, because that's generally the biggest challenge, is getting people aligned so that you can accomplish some of these things. Kind of show people what good will come of this, get them excited about the possibilities, sell them on the future state of where we're going to be when we're done with this. All of this goes towards helping to get everybody thinking about innovation and process improvement. And I can tell you that based on what I've seen with document processing, that's where people feel the most immediate benefit, because it makes their lives easier, it makes their customers happy, and that spurs them on to want to do more, see more.
You kind of, in answering that, you sort of addressed or made me think about another potential problem here is that you talk about all the things that need to fall into place, that you need to get the buy-in from senior management, that you need to be able to show the benefits here. And I'd imagine that for most of the attendees here, most of the people who are listening to you and watching this presentation, this makes a ton of sense to go down this path. But for someone who wants to be an evangelist on this, somebody who wants to be, a change maker, tip of the spear in a new way of doing things, what more can you tell them? What more guidance, tips, anything that you can give them to be perhaps more effective in that, in trying to sell the people who need to be sold on this, the silo keepers and the top managers, all of those folks?
Well, there's nothing specific to how to do this to sell people. This is just human interaction 101 and dealing within a corporate culture. Here are the characteristics that I saw that have been associated with folks who've been successful in doing this. And that is, first, they got to be motivated to do it. Because if there's no passion, if there's no motivation, they're not going to be able to embark on the other things that I'm going to mention. The iterative approach allows you to, as I mentioned before, to demonstrate some level of success, to be able to show people something and say, that's what we did before, this is what we do now, or this is what we can do now if we blow this out further. This is impressive. I could see how this could be something that we want to do. I want to now show this to my boss, and he's going to want to show it to his boss or whatever. So I think being able to iterate, demonstrate that you can get some of those quick wins. I think you got to be a good salesperson. There are going to be people that are going to be all gung-ho about this, especially the younger folks that are coming into the bank. And by the way, it's critically important that you motivate those folks, because we all know how hard it is to find young people to come into especially retail banking these days. So you've got to give them kind of a roadmap of how they could evolve here as well. Otherwise, they're going to be off. They're going to go and find an opportunity somewhere else. There are going to be people that are, frankly, within a few years of retirement, are going to look at this and say, I don't like this at all. So you need to sell them on it. You need to paint a picture for them as to how this is going to be good for you. This isn't going to replace you. You're not going to lose your job. This is going to give you the ability to now focus on the things that you were probably hired to do originally, which is better serve your customers, serve more as a trusted advisor to account holders and customers versus just moving paper around or typing in, mundane, mind-numbing tasks over and over again. So it's a bit of showmanship, it's passion, it's a desire to learn a little bit so that you can do a little bit and show some results, and then you got to go out and market it and show it to other people. But I'm telling you that my experience is there's a hunger for this. In the RPA world, there is this evolution of the concept of the citizen developer. Let's put the word developer aside for a second, because we can get into a holy war as to what makes a developer. However, the point that I think is important to take away from that is that the rise of the citizen developer, by providing them tools that allow them to automate processes without without the help of IT to start. We'll get into governance and all that some other time, but just to be able to do something and demonstrate it, I think is critically important. And out of the citizen developer movement, to me, that's the most important aspect of that evolution, is that people are kind of excited again about the jobs that they're doing and improving how those jobs are being done to free them up to do more of the things that they want to do.
So, Joe, to kind of tie this all together and wrap us up and get us into the Q&A part of the program here, what are the benefits? Tell us more about the benefits of taking a more holistic approach to document processing and document management.
Well, the benefits are often obvious, and they are often focused on streamlining processes, cost efficiencies, that kind of thing. So cost improvements, creating efficiencies that result in a better customer experience, better employee experience, that's the bread and butter of these kinds of things. Dramatically improving your ability to comply with regulations, be they internal compliance rules or government regulations, et cetera. But there are other benefits as well. For example, a lot of the benefits that people glom onto when they first start these are those cost-cutting measures, improving the day-to-day lives, and that's great. And that's where they should start, because that's very quantifiable. I can show you that if a process used to take let's say we're originating a loan, and we used to close a loan in 4 weeks, and now we're doing it in 2.5 weeks. Well, the benefit there is obvious. However, there are some other benefits as well that are not purely geared towards cost reduction. And so your question before about how do I get senior management interested in what we're doing? Well, you start talking about the revenue side of the ledger instead of the expense side, all of a sudden their ears perk up. Yeah, they want to cut costs, but expanding the pie is really what it's all about. So once you standardize the way that you process and operationalize documents, which is really what this is all about, you're in a better position to expand that revenue pie by being able to participate in more ecosystems that can drive new business, broadening your ability to embed your offering in the offerings of others. So embedded banking, embedded finance is a hot issue now because organizations are in a much better position today than they ever have been, or at least they see how they can get there because of the technologies that are available that allow them to extend their reach. So it's not just about cutting costs and streamlining processes, though that's critically important. There can be significant revenue opportunities and reduction in opportunity costs or reduction in the number of times an organization needs to sidestep a potential deal because the technology lift is too heavy. Another Bob story. I love Bob stories. So Bob, this is on the cost-cutting side. So Bob was working with a bank that didn't have an ECM. And he went around measuring floor space, and he found out that 13% of their total floor space was consumed by filing cabinets. And forget about the time that it takes to find documents when you need them. Forget about what it costs to recreate a document when you've lost it. Just think of 13% reduction in your facilities expense if you could get those file cabinets out and digitize that. That's just in the storage of the documents. Forget about automating your processes. Forget about better serving your customers. This is just in the expense of housing paper.
So while not a total replacement for not having Bob here with us today, it's good that you're able to at least introduce a little bit of Bob's stories to make up for that. But so now it's time for Q&A. But before we do head into Q&A, I would like to remind the attendees that it's not too late to ask a question. If you still haven't asked your question yet, all you need to do is to type that question into the Q&A box on your screen, and it will pop up here on our end. I also want to encourage you to take a few moments to fill out the survey that will be appearing on your screen. You will also be able to find that survey link in the right-hand box on your screen. So let's go to the questions that we have in hand so far. Joe, what document-intensive projects do you see on the foreseeable horizon for banks and credit unions?
That's a good question, and they're often the same, but I think that's going to be changing. I'll tell you why. The most document-intensive process for most institutions is lending, specifically commercial lending. Setting aside the PPP as an extraordinary circumstance, because that, along with supporting remote workers, was kind of all-consuming for a while. And thank goodness that those issues are calming down, although we've got other issues that are now heating up. Financial institutions now are starting to revert back to the mean, which means that they're placing their emphasis on the place where they make their money, which is on lending. The only thing, though, that I'm seeing more of, though, is with rising interest rates and indications of recession, financial institutions are again questioning the wisdom of the functional silos that they've built during the good times when money was cheap, when it was easy to go out and sell money. This goes back to my point about viewing the customer more holistically rather than merely a source of transactions to monetize. I mean, the only way you can get a more holistic view of the customer is to integrate documents and processes across the organization. So more and more organizations are getting that in order to provide a more consistent digital experience and expand its offering, it needs to become a better, more integrated system of services and improve its ability to share data. So these days, more organizations are asking us about the kinds of services that I've been talking about in order to better serve customers across the board while improving their ability to handle the Yeah, the avalanche of regulatory requirements that are coming in on a daily basis, and requirements that to me seem more ambiguous than ever before. So getting a handle on the process of collecting, classifying, extracting, storing, accounting for documents independent of specific bank products or services is becoming the order of the day. So I think it's going to expand well beyond lending, but lending is the bread and butter. That's what we see the most of.
Next question is, what functional areas do financial institutions usually tackle first after implementing the shared service?
They go where the money is. Lending. It's the low-hanging fruit. That's where the bang for the buck is, and that's where the competition these days, especially as competition is coming from so many different areas, that's where the competition is fierce between other banks, between banks that are now embedded, not only in in other financial offerings, but they're appearing. You go to the bank, you go to the hospital, and you have a child, and all of a sudden you've got all kinds of embedded banking services that the hospital is making you aware of from a partner of theirs. The lending is the biggest challenge, and that's why they go to that one first. But again, as the interest rates go up, the desire to become more embeddable so that they can now be somebody that someone else is afraid of because they're embedded in places that they traditionally haven't been. That makes it an easier way to expand their business. So getting one's house in order and making processing more consistent and repeatable is a critical step in engaging in embedded banking. And that's regardless of whether you're embedding your offerings in somebody else's offerings or whether you're embedding their stuff in yours. Also, what I've heard a lot of recently is that banks are looking at this capability as a differentiator for new products. So, for example, some of you folks may have heard of a company called Trustworthy, which markets something called the Family Operating System. It's basically a digital safe deposit box. Well, who's better to sell that service than a bank? And so organizations that want to provide that kind of really sticky and relevant service that leverages their brand as a secure institution. This is where I want to store my most important financial documents. And by the way, the organization I'm working with has demonstrated an ability to repurpose those documents as they better serve me as one customer, again, as opposed to a collection of transactions. But all of this starts with getting your document processing house in order.
So this next question is about the button, a button that you showed during the document lookup. Are there other things that this button can do as well for the user?
Yeah, the answer is yes. We could do multiple webinars on how RPA, that's what that button represents, could be used for other things. The bot can basically automate any process. And so in the example that I showed, we were initiating a search. But as I said before, I could click that button and I could have it pull up directions to where my customer is. Or I could have it go up to Experian and pull me down a credit report. Or I could have it kick off a Know Your Customer background check. Whatever it is that I want to do. As long as it is something that is deterministic, as long as I can teach it steps to follow, and those steps don't have to be rote, those steps can have all kinds of variation in it, those bots can be taught to be able to do that. Banking was kind of a laggard with regard to the implementation of RPA compared to another number of other industries, which I never really understood other than the fact that financial services tends to be slower, more cautious. But when the PPP program hit, that is when RPA all of a sudden became the belle of the ball for banks, because they had this deluge, this explosion of transactions that they had to get done. And so they said, we don't have the people to do it, and we can't get any more hours. We already have people working 80, 90 hours a week. So maybe this is an opportunity to try to use those bots. And here's the interesting thing that came out of the PPP RPA experience. During the first PPP program, the $350 billion got eaten up real fast. And a lot of that was based on the use of robots that were pumping in these transactions. Well, the SBA had some issues with this. First of all, their E-Trans system was inundated with transactions. that were driven by remote controlling the user interface to the application. It's not something typically that organizations in the past have tested for. They test to make sure that they can handle volume through APIs and things like that, but they don't think of transactions coming in through the user interface at warp speed because the assumption is there's somebody typing it in. Not the case with RPA. So when the second PPP program came out, the SBA actually banned the use of these robots for two reasons. One, hey, you guys are bringing down our systems. This is not the time that we want to be down. But more importantly was that they felt it created a problem from a standpoint of equity, meaning that, well, the banks that have the robots are going to get more of the PP business than the banks that don't. And the assumption that they made was that it was the large institutions that were using RPA to pump these transactions in. And based on our research, it turns out that's not the case. It was probably split more 50-50, and it kind of makes sense because the large institutions could throw bodies at it. The smaller institutions couldn't. And the smaller institutions have a guy or a gal calling them up saying, hey, where's my loan? Where's my loan, et cetera, et cetera. And so that person was just thinking, how do I get this problem solved? And that's when the banks kind of capitulated and said, okay, let's bring this technology in. And then what they realized is that, well, this is a competitive advantage. Where else can we use it? And so that's what we're seeing with RPA. And so when you ask the question about what else can the button do, it can do a lot of really great things, like save your bacon when it comes to entering transactions for PPP.
So there's a lot of, scale has always been a thing in banking, but there's, even more since COVID and since the response to COVID, scale has been a bigger thing than ever. Are you suggesting here that this is a scale neutralizer or a scale offset for smaller banks that, as you say, don't have all the resources, all the people that the large institutions have?
No doubt. And a lot of it is driven based on something that I said before, that it is taking longer than ever to recruit people in the banking industry. They are coming at a higher cost in terms of recruiting them. They are asking for more when they get there. And the last thing we want to do is relegate them to being data entry clerks. So what we want to do is we want to bring in these people and we want to give them jobs that are fulfilling, things that made them want to go into banking in the first place, not become typists. So by utilizing technologies like RPA, which serves as kind of a universal adapter that guarantees a using organization that I can integrate anything into anything, regardless of whether the vendor is okay with that, regardless of whether I have any skill sets in working with the APIs of the underlying technology, as long as I can show what the transaction is, I can automate that process. Well, that is a tremendous game changer when it comes to scalability. So yeah, RPA without a doubt. And by the way, based on my years in RPA, I've been doing RPA for almost 20 years now, a decade before RPA even had a name. And I can tell you that about 80% of the automations that I was involved with worked with documents. So RPA and document processing work hand in hand, whether it be pulling information out of documents, migrating data that's been extracted to other applications, constructing documents like form assembly, acquiring documents like the example of the bank before that I gave with the marketplace. It can be used all over the place. And then you could take your people and not replace them, focus them on something that's more interesting and better serves the needs of customers, which better serves the bank.
All right, so that is all the questions that we have in hand. So thank you, Joe, for sharing your expertise, your insights, and of course your Bob stories with us all today. As a follow-up, here in spirit with us. But as a follow-up to today's session, attendees will receive an email from BAI within 24 hours. That will include a link to today's webinar recording. We encourage you to share this link with your team or with other peers who might benefit from the insights that Joe shared with us today. You can learn more about BAI and find other relevant content and actionable insights, such as the BAI Banking Strategies podcast. All of that is on our new and improved website, bai.org. So thank you all for being with us. This ends the session, and enjoy the rest of your day.
Thank you, Terry. Thank you all.